Good morning, everybody. Welcome to Bitcoin Daily, 9 a.m. Central European Time on the dollar. We do show every day, Monday to Friday, because we gotta know what's happening in Bitcoin, altcoins, and everything else. And guys, Bitcoin's having a little bit of pullback right now. I'm in a short position on Bitcoin. Yesterday night, I don't know, it was after the daily close. You know, I said I wanted to, if it goes above the daily, if it goes above the 4-hourly, start moving averages, it start pumping big time towards the upside. I said I will be buying, my 70% back in. I opened the exchange. I found the coins. I entered the amount, and I was sitting there with the mouse on the buy button and waiting. But my feeling was telling me, something is wrong. Something is not just 100% right. I was like, let's wait a little bit more, because I was having a lot of I was kind of FOMOing in, and oftentimes when I do want to FOMO in, I need to listen to my signals and ask myself, what is wrong? You are FOMOing in, and that's always regarded as not the best time to do stuff, right? So we did have a very good close on the daily time frame. We did have a very good close on the 4-hourly time frame, but unfortunately something was a little bit off, and I shorted. You can see up here I have a short position right now from 23 to 38 up here on this pullback towards the upside. Actually, it was over here on the move towards the downside, so I was a little bit down when it came up here, but it got rejected and still going towards the downside up here. So up here at the top, I was watching, there was some kind of rising wedge up here, and it was going down, and I shorted actually Bitcoin. I was actually longing all the way until then. I had the at most like 4 position open yesterday. I was longing all of the stuffs. Right now this position is 5% up, so it's very nice, but I am in a short right now, and the reason is, I'm gonna explain to you why the reason is. But before we start to that, who is in the chat? Mladen, of course, Christopher, Van Niekerk, how you doing, man? Roshten Army, hello. Gort, we are in no man's land, but the XY making a bull flag. I don't know about bull flag, but it is strong. Yo, Kuya Ko, how you doing? Mad love and respect, thanks, man. Jimmy, what's up? Hello, lads. Didi, hello everybody, how you doing, man? Move it TL, we don't got all day. I'm sorry guys for keep you waiting, but you know how we do it on this show, you know how we do it on this show. We are used to TL. Hi everybody, hi Wei, how you doing, man? Sputnik is in the chat. Gort, have you heard the good news? What are the good news? I didn't hear any good news. The Santa Plan, what's up? I'll look at Bitcoin price and see that there are no good news. Good morning, friends, how you doing? Hello, bro. Short or long? Simple question. Well, I just said, I'm a little bit short, so there's that. Short Bitcoin late at 23 240. This is much bigger position than I usually take. Yeah, we can also talk about position size, because you'll see up here that my position right now is 100% of the account. And I started doing the small position stuff like that, but I got a little bit different theory right now, because yesterday when I was doing the long, I was having 4 positions. I was almost I had my entire account in 4 position on high leverage with tight stop loss, but I kind of felt like I cannot follow all of my positions, right? So I was thinking, I think it's better to have 1 or 2 positions with half or full of account, and then follow those positions rather than opening 5 different ones and then not following any single one, right? Why is he broke from trading? Senior Pro go back in town. Jagger Mario, 3 Fed chairs speak today. Jerome Powell make sure they protect his longs from yesterday. wait, semi-small position. 50% of my account. Yeah, that's big. Garrett. So, as you can see up here on the channel, guys, so hello, welcome to Bitcoin Daily. We're gonna talk about it. We're gonna also talk about, we are only 22 people here, so I will reveal a little bit secret, TA Fans Club secret for you guys. We're gonna talk a little bit about chilies and how to draw trend lines, so there is that. But we're gonna do that after Bitcoin. So you can see here Bitcoin, started going up here in some kind of channel over here. Right now, pull back. It went into this channel up here, pull back, went into this channel, tried to pull back up here, came back inside this channel up here. We're gonna see if it starts getting rejected and increasing speed towards downside. But it looks like right now it's failing to get to the next channel over here, and do the move. So let's start first of all talking about why did I short yesterday up here and what is wrong with this price action over here. And the thing is, I don't know if you've been following for the last couple of days or a week. I don't know when I was talking about that, but I was talking about the curving towards the right side. So over here, you'll see we have a big pump towards upside over here, huge euphoria, big move down below the supports, and then we managed to get up here. But the move towards the upside up here is curving to the right. You see up here, and it's coming, you know, almost exactly up here towards this, you know, towards this top up here. And if you measure, you know, from the very top up here towards the, you know, towards the top over here, it's 0.43, give or take. If you take it a little bit down here, it might be, you know, 0.5 or something like that, right? So this stops up here to the top over here, it's exactly 0.5. And why is that important? Because if you have some kind of, you know, 1% loss on your account on 10x, the 0.5 is the level that you're gonna get, you know, your position closed. So it did come all the way up here, you know, towards the previous highs up here, and then it pulled back. Also, these weeks up here, you know, indicate some kind of overshooting and some kind of move above these levels, picking up whatever liquidity there was up here, and it moved towards downside over here. You also see there is a little bit, you know, volume exactly over here when it actually overshoot, made this volume. But this curvature up here is very, very important, guys. This curvature up here is very important because strong price. I said, you know, I don't know when I was talking about what stream was that, and you know whether you were watching. But when price goes up, it usually goes, you know, it usually does, you know, curvature, something like this. And I'm going to explain to you the difference between curves. This is one curve, and this is the different types of curve, right? A strong price might actually just go, you know, strongly up, you know, and pull back, and then continue going towards the upside. But weak price will make this right-sided curve towards up over this side. So why is this very important? And this is, it has a little bit to do, you know, buying and selling, and a little bit, you know, how to read the charts with psychology. Because when we start going, you know, towards upside and sideways, what's happening up here? There are definitely bullish people buying the price. But the reason it goes sideways is because there is a lot of selling pressure up here, and selling pressure is actually winning because bulls cannot push the price high faster than the bears can actually you know, erect the price towards the downside. So this curvature up here is very, very bearish indeed. Oftentimes this can actually pop up here and continue towards upside, but there is important resistance levels that you gotta break. We didn't break those important resistance levels. We curved up here, and right now we, you know, starting to you know, lose these levels towards downside. So the bears are winning, guys. The bears are winning. So this curvature up here is very important. This happens all the time. If you have some kind of move, impulsive move towards downside, you'll see recovery above the resistance up here, which is very, very bullish, very straight line, you know, almost towards the upside. But if you see some kind of curvature that goes something like this up here, oftentimes it's sign of weakness in the bulls. And this curvature up here, the right side of the curvature up here, oftentimes indicates that, you know, some kind of drop is happening. If it goes up here, it can still go towards upside, but it's not a very strong move. That's what I'm trying to say. So this price up here can definitely still go towards the upside over here for whatever reason. But we know that the first move, this move over here is not very strong one because it is curving towards the right side. Different than this is a curvature that goes something like this over here. It curves towards the top, right? It goes kind of sideways and then curves towards the top. Because although bears are trying to push the price down, there is a lot more pressure towards the upside by the bulls, and they are managing to win every single time over the bears, and they are managing to push price. So we like these kind of moves. These are very, very bullish moves, very strongly bullish moves, and these are of course parabolic moves, or some kind of almost parabolic moves towards the downside, towards the upside, right? So over here, where was it? If you go to the daily time frame, of course, on the bottom up here, you'll see up here we have this curvature that goes, you know, slowly towards upside. These are very, very bullish moves, of course. And of course, once you start going towards upside, there will be channels up here that you are breaking towards upside, right? Over here, there is maybe some kind of channel up here, and then you go into this channel up here, and then break channel. So you're breaking the resistance. When you are doing this move up here, you are breaking the resistance lines towards upside. Stupidly bullish move, right? On the other hand, the curvature to the right that we are having right now, the curvature to the right, and these are small time frames, but you know, the curvature to the right, the problem is that you are not breaking the resistances, you are breaking the supports. So you're having here a support level over here, or trend line, right? You're breaking that, right? You're having the next, you know, trend line up here, where is it, over here, and you know, you're breaking that. You're having the third trend line over here or something like that, yeah, right, and you are breaking that. So you can see here that we are curving and we are breaking the support levels. So this move up here, when you see this move that's curving towards the right side, it's often indication of weakness in the price, momentum loss. And this is the same thing that's happening on Bitcoin, of course, on the bigger time frames. If you go to the, you know, the daily, sorry, the 4-hourly time frame up here, and this is also the reason why I sold, because the curvature up here has been breaking the price. Let me just write something like this up here. We got you know, this level up, but before we had this level up here, the first sign of weakness came when we had this parabolic move, and parabolic move stopped, of course, and then we had the line up here below us, something like this, give or take, maybe up here a little bit. There's something like this line up here. Then we create this line. Of course, we start going up. We broke that as well towards the downside over here, right? And then we had this line up here. Where is this line up here? Something like this over here, and then we broke that towards the downside. So we are curving in a way, you know, we are breaking the supports. We are curving towards the right side, and oftentimes that is a weakness in the price. And right now we are, you know, yesterday we managed to close above. Technically we closed just below the 10 moving average, but we opened above, which should be bullish. And the major support level right now is down here at 20 moving average, and these stops up here. So 20 moving average, you know, 23K is again a very, very important support level. If you go below that, again, with a candle, it might be actually quite bad. Means rejection of the moving averages. But we are curving to the right. That's what I'm trying to say. We are curving to the right, and curving to the right is never a good thing, because that means that, you know, the bears are winning. The same thing, of course, also happened at the very top up here on the bull market, where we're going towards upside over here, and then we start curving to the right, right? And once you start curving to the right, that's never a good thing, because you're losing the support levels, right? In some kind of very stupid bullish momentums, this can actually, you know, curve to the right and then break this resistance up here and continue. But you know, you gotta have the move. You gotta have the move. Without the move, you don't have anything. Without the move, you don't have anything. So over here, on the, let's go to small time frames up here. I saw the curvature and I was like, this doesn't look good. And there was also some kind of rising wedge up here. Rising wedge up here that failed. Over here, I was looking at the rising wedge, of course. And in a strong bullish moves, these rising wedges break towards the upside and price just explode. So I was expecting price right over here at 2 a.m. or something like that. I was expecting price, and I was waiting, you know, with my fingers on the buy button. I was expecting price to continue pumping towards the upside. I was expecting price to break the resistance and continue going towards the upside, but it failed to do that. You can see these 2 weeks up here. You can see also the volume down here. It failed to do that, and oftentimes that is some kind of sign that, you know, okay, we right now try to go up here. We've tried 2 times. This is 1 try, this is 2nd try. This on the small time frames really, but you know, but still. You know, even it's a small time frame, maybe it's time, you know, to wait a little bit up here. And it broke out of the, you know, everything, and right now it's curving towards the downside. Now the big question is how far down is gonna go, where are the lines, you know, where is the support and resistance level, what needs to happen right now, you know, to continue this rally towards the upside and whatnot, right? And you know, we can discuss about that, but there is definitely, it looks like some kind of channel over here that is playing out. If you break channel towards upside, you might have a nice rally towards upside. If you break towards downside and, you know, start breaking these support levels over here, it might be very, very bad. So I'm looking at this channel over here. It's a small time frame channel, but we're gonna keep on you know, analyzing it, but small time frames. But the curvature was legit. Curvature, you know, up here when you start going towards upside, curve towards sideways. Right now it's pulling back. You can see here we are right back below this very important 50 moving average. Right now pulling back. There is a huge support level down here at the 10-20 moving average. What you're also gonna notice is that we had the double bottom down here that played out very, very nicely. So this is some kind of top of the double bottom. We are not measuring the wick, we are measuring the close. And from the close and the bottom down here, give or take, if you measure the distance up here, we come to this stop over here. So we did, you know, the double bottom did play out. Right now we are having a pullback, and the pullbacks are, you know, for whatever reason, you know, buying opportunities, right? And yesterday I said in the chat, I really hope, you know, we get the pull. I need pullback back from yesterday. You know, I was talking about this pullback up here because, you know, I didn't long this down here towards upside. So when I up here, you know, I was like, oh man, I want this pullback back. So I'm guessing somebody heard me, and you know, they're giving me 50% right now, 50% discount on the pullback. So we're gonna see if we can pull all the way down there or what's gonna happen. But it is losing strength. You can see try to go up here above the moving averages, pull back a little bit, crossing below the the 20 line. There's 20 moving average, 200 moving average right over here. This on 1 hourly time frame. So if you can manage to do the move towards upside, it might actually be good. You'll also see over here on my right now on my this 5 minutes, but if you go to 15 minutes or something like that, well, let's go to 4 hourly up here. 4 hourly, my stop loss is above the moving averages up here. My 1 hourly up here is above the moving averages stop loss, and you know, any other time frame, it's just above all of these moving averages. And it is in profit. My stop loss is in profit, so I'm not going to lose any money even if it goes towards the upside. But it's in profit. But I think the notes, it is above the moving averages, right? So over here you got these moving averages up here, some kind of a very important resistance level. So if you do go above that, you know, it just might turn bullish immediately and continue towards the upside. But I'm giving it a little bit more time, especially this daily candle over here. So I did not buy it just yet, and I'm giving it, you know, I want to see how this daily candle plays out. Now the biggest reason why I didn't buy is once I noticed this curvature towards the right side, there was something telling me that something is not right. So I went back and I was looking at the chart, and I was trying to tell me, you know, but it is good candle, it's above the moving averages, but is it above the trend? And there is a very, very important trend line on the charts, especially up here. I always tell people, when you see this big drop, something up here is very, very important. So there is some kind of trend line, something. The reason you're getting big drop is because you lose some very important support line. You are losing something. It might be the 50 moving average, it might oftentimes be some kind of trend line over here. Something very, very important is happening. So when you lose that level, something very important level. So I was thinking, like, where, you know, where is the most likely, you know, trend line over here? And I'm thinking it's something like this over here, guys. And I'm thinking something like this, especially because these bottoms down here come right under it. You can see a lot of support over here, right above us. You can see a lot of support here, right above us. You can see over here, there is some kind of overshooting. So there's definitely some kind of line over here, but there is definitely overshooting over here, right below us. And then this move up here. So this line is definitely 100% legit. And you can see where this line ends at the exact very top. So is it a retest up here towards the upside? I don't know. I don't know if it's a retest. The line is not 100%, you know, I'm not 100% confident line. We can go to the daily time frame. You can see here, it's a little bit sketchy when you enjoy something like this over here. You know, where the line is, it doesn't hit that many stuffs, you know, on the line. Maybe something like this up here, it's a little bit better. You know, maybe we're gonna use, you know, some kind of 8 hourly, just so what is it, 8 hourly over here. Maybe this is nicer, but it is kind of nice line. It is kind of nice line up here, maybe down there, and then these wicks down here. It is nice line, and we are really hitting that resistance over here. So what we did is we are losing momentum over here. We are losing momentum. You can see this is also a very nice line up here. I always watch it up here, give or take, something like this. We just gonna, you know, we are losing momentum, especially up here. We lost the, you know, uptrend over here. We retest that uptrend. Then maybe it's the line over here, something like this over here, give or take. Then we had, you know, this move up here, then we lost that over here. And right now we are having this support line up here where we bounce towards the resistance up here. And I'm still a little bit on the sidelines whether this is a good or a bad thing. So I would say that, you know, even though daily time frame is, you know, technically above moving averages, I managed to bounce off of the 20 moving average bullish engulfing candle, and the 4 hourly did manage to close above 50 and even stay above 50. You can see this gray store doji wick up here, and right now we are pulling a little bit back. I would say that even though everything is nice, I think we need to close above, you know, these levels on the top side over here. That's around 23.5 give or take up here, depends where the line goes and when it came to that line, but around 23.5 give or take. We need to close above that to get back into the trend. So if you want to get back, because if you don't get into the trend, what we are doing, we are just, we can definitely do this move up here, but you know it's a slow move towards upside. So if you want any kind of pump, we need to get above this line over here, over here towards upside, and then we need to, you know, get above certain next level and then increase the movement towards the upside. So until I see some kind of movement above this line up here towards the upside, I'm unfortunately not buying in just yet. But altcoins have been pumping yesterday, huge amount of, you know, bullishness. Powell speaking and everybody thinking it's a stupidly bullish thing. Price managed to, you know, recover big time after a big dump. So, you know, I was a little bit on the sideways when it came to, you know, the bullishness. So that's what I'm seeing right now on the charts. I'm a short position. I still haven't bought in. I'm just looking at markets now. There is definitely, you know, stuff pumping and stuff like that, right? But you can also see up here that the DXY is on the support level. So DXY, although this move up here was curving towards the right and it lost the support, it is still on. It lost the momentum towards the move towards upside. See this big move up, then try to recover up here and went down. It lost the momentum, but it's only after breaking this support towards up, because right now if it starts pumping up here and continues towards upside, that is strong indication that the price is actually in fact is actually very bullish. And you can see up here, if you join something like this over here, you might get some kind of maybe rising wedge. So, you know, getting some kind of support up here and then doing another move up here towards the upside and then failing towards the downside, that can definitely happen, right? But we are, you know, DXY is on the support, so, you know, and until it actually breaks the support, we don't actually know what's gonna happen. When it comes to stock markets as well, you remember the rising wedge on the let me just zoom in a little bit. I think I drew some stuff up here that's, you know, destroying my view. You remember the rising wedge up here, and you remember that we went outside of the rising wedge up here. Let's go to a little bit bigger time frames. Rising wedge, we went out of the rising wedge up towards upside, pull back, but we came with this move only towards the resistance, and right now we are pulling back. So we tried to, you know, go up, we failed that, we went down double bottom up, we tried again and are failing again right now. So this resistance up here is actually holding, guys. Unfortunately, it is holding. Nasdaq, if you remember on the Nasdaq 4 we had, you know, tried to break out of the channel towards the upside, pull back into the channel, into the resistance, and right now pulling back. So it is failing for the second time to break out of the channel. And the Dow Jones also came up, you know, almost to this, you know, very same, you know, triangle up here towards the upside over here, and right now it's pulling a little bit back, but still, you know, it's some kind of middle up here. So Dow Jones actually looks better than S&P 500 and Nasdaq. So yeah, both Nasdaq, S&P 500 hit, you know, broke out, pulled back, hit the resistance, getting rejected right now. The Dow Jones is trying to, you know, technically maybe it's hitting some kind of resistance, maybe my line is a little bit off. And the DXY is on the support level. DXY is on the support, everything else hit resistance, even Bitcoin hit resistance. So I would be a little bit, you know, cautious, you know, even though I might miss a move or two. I need to see this line breaking. I definitely need to see this line breaking, because until this line breaks, nothing happens, right? But there was a lot of euphoria yesterday. Altcoins pumping like crazy. I was euphoric, guys, yesterday. Yesterday I was formally into the altcoins. I was trading. I was having 4 positions, and we can talk about positions right now and the size. I was having 4 positions with, you know, high leverage, 10x leverage, and, you know, 0.5% stop loss. Tight stop losses, right? I was doing Waves, ApeCoin, Dogecoin, Shiba. I think I even want to do AVEX. I actually jumped over Vegas. It doesn't matter. I had 4 positions, right? 4 positions. Yeah. The other thing is, a lot of coins are on this in these channels on the support lines, guys. On the support line, a lot of coins are right now in the support line. So the big question is it time to buy in the fear, or, you know, the pullback? Because a lot of coins have these channels that goes towards upside, and right now they are on the support lines. They are on the support line. See up here, we also broke this trend over here towards upside. Right now pulling back. So you know, yesterday it was a little bit overextended. Right now it's pulling back. So if these channels, a lot of coins, guys, a lot of coins got the channels, and a lot of coins got the patterns, and a lot of stuff is on the support. I gotta tell you that a lot of stuff is on the support. So if Bitcoin does another move, everything, you know, as you can see here, AVEX, you know, got 24% at least upside up here to the top of the channel up here. Everything is gonna explode, guys. Everything is gonna explode. But I'm a little bit sitting on the sidelines and waiting a little bit. Also, although this trend over here broke, there is another trend over here, give or take up here, something like that's the triangle up here that did not break. So, you know, the steep movement down over here, it did broke towards the upside, but this slow triangle up here is not broken, and this triangle has, you know, probability towards upside and downside. But all coins are not all coins, but a lot of coins are some kind of support levels. That said, the position size, guys, the position size. The problem with position size is is let's say I have 5,000 on account, I do 10x, 1% of account, 0.5% stop loss. I'm risking 50% of my account. I can only have 1,000 bucks position size. The problem with small position sizes is, you know, you want to make your money work for you. You don't want to sit on the sideline when stuff is pumping, right? And when you only have, you know, a little money in the market, at least the way I see it, of course this is very risky, but you know, that's kind of game we play. When your money is not sitting on the sidelines, not working for you, you are actually losing on gains. You are technically losing on gains, right? And not only that, the biggest problem is following 4 positions, the trend lines, the moves, especially in the start. I mean, when it starts going up, you know, it's very easy to put stop loss, some kind of profit, and just let it go. But in the start, it's very hard to enter a position, right? And maybe I'm a little bit too, you know, what are you gonna say? Too greedy. But I feel it's a lot easier to, you know, have either, you know, instead of having, you know, 5 small positions, it's a lot easier to have, you know, 1 position and risk, you know, 5% of account, then have 5 positions and risk 1% of your account. Because then you can have, you know, full account, you know, to work for you. You're still risking, you know, whatever you're risking from the 5 trades, but hopefully you're gonna be right. So less trades, bigger trades, instead of more trades, small trades. I think that's the way to go. So yeah, we're risking 250 bucks, but you know, when you have time in your 10th position and stuff like that, and you're finding something that's good, you know, because when you're trying to find a lot of coins to long and stuff like that, you're just being greedy, because oftentimes you don't know what's gonna pump. You're gonna miss up on this 400% pump, and that, you know, 200% pump, and this 300% pump. And yeah, sure, you might miss on the pumps, but important thing is, you know, to be having money work and money being going higher and higher. Although you're not, you know, getting these, you know, 50%, you know, moves, you know, a 5 to 10% move is, you know, pretty legit. So, but the problem also might be the trigger anxiety when you're trying to, you know, deploy your entire account. So, you know, I'm still unsure what's the best way to do and what is not to do. But I've just noticed that, you know, trying to enter, you know, 5 different positions, finding 5 different coins is not easy. It's not easy. So if people are, you know, if people are doing 1% of their account, they should have a bigger stop losses up here. You know, small trades, bigger stop losses, whatever. Depends on how much of account you want to use, you know, and because you have to have a lot of downside, I know for a fact that, for example, guys like Crypto and the Crypto and the Moon and Cryptomo and these guys from Dubai, stuff like that, they are putting 10x positions without a stop loss, guys. So these guys that are putting a position without a stop loss, they have 8% downside. 8% downside, right? This is what they have. They're going to liquidations, right? So that it's a huge risk, but you gotta understand the position that's putting in, even though it's $1 million, it's still just a small percentage of their entire account, right? So then, okay, it's like me doing 100 bucks, you know, 10x, and I'm gonna let it go to liquidation, right? That's something like that, right? That's something like that. But they're letting the, you know, positions go until liquidations, and eventually when the positions are in profit up here, you know, they post, ah, look at me, I'm great trader up. Yeah, I mean, definitely this can work out, but it's a huge risk because you are risking, you know, a lot of money. You're risking a lot of money. You're almost preaching DeFi. So because of all the recent and not so recent major world events that wiped my ass. I think they don't put a stop loss to avoid getting stop hunted. It might be that as well, but I think mostly it's because you have 8% downside. 8% downside is huge, guys, especially when you're some kind of bottom down here. I mean, 8% downside is huge. This 15% downside. So this last move down here, you know, it doesn't matter up here. That's 8% downside. Like anything down here didn't get liquidated, right? Anything down here in this base down here didn't get liquidated on a 10x move. Anything. So this was the you know, the 10x you know, long rally up here on some kind of double bottom up here, because you know, you do 10x. So even if you're up here and you go down something like, you know, 5-6%, still don't get liquidated because liquidation is all the way down at 10 bucks, right? So there's that. But it's a huge risk. It's a huge risk. So I don't think I'm gonna do, you know, let my stuff go to liquidations. I hate that. I hate it. Mladen posted something in the chat. Mladen posted something in the chat. He posted some kind of lines. And you can see up here. Now we come, guys. I'm gonna reveal the TA Fans Club secret up here. So follow along. Follow along. Mladen posted this image of chilies, and he drew the line. It is a nice line. It's a weekly line. Then I drew my lines, and I drew it like this. And I said something really cryptic. He said, it also has 3 touch points, but I would like to think that mine is correct because of less fake outs. And I said, your does not use a pivot point at least once, and you have 2 green wicks, mine are red. And he's like, what? So I understand that. So let's talk about the lines, and I'm gonna read a little bit secret to you guys. So follow along. How to draw a very nice line. So we're gonna go to the weekly time frame up here. We're gonna remove the moving averages, and we're gonna look at you know, this is my line. His line is something like goes this week down here, goes this week down here, something like this up here, I think. Yeah, this one and this one over here. There we go. This is his line. And I said, you can see up here, this is, I mean, this is a very important pivot point. This is a very important pivot point. This is some kind of pivot point. This is also some kind of pivot point. You can see that the wick up here comes from this candle over here. It's not that important. We use all kind of wicks, guys. We all use all kinds. The only thing that's important up here, but you are using the green candle up here. We're gonna talk about the green and red candles. Now look at this, guys. Look at this. Oftentimes when you have some kind of horizontal support level, and that's first of all, let's say this. We don't use, when we are looking at big time frame and stuff like that, and we want to, for example, up down here, make sure that we have a right, you know, horizontal support level, we don't use wicks. This is not a horizontal support level, and that's because we are using the wick to draw the horizontal levels. So anytime you see people using horizontal levels, I think they are doing it wrong. I'm mostly confident that they're doing it wrong because my experience tells me sometimes. What we do is we use the closes. Now, why do we use closes and not the wicks up here? Because wicks oftentimes overshoot the support and resistance level by a whole bunch of moves. They overshoot everything. Why? You can have huge euphoria, you can have huge fear towards downside and upside. You can overshoot very, very important, you know, support and resistance levels. And these overshooting of these levels often indicate some kind of pullback. You can see up here that this candle, and they are bearish engulfing candle, there was some kind of overshooting that happened, but it happened on a bigger time frame. Let's see here, two weekly time frame up here. You still got this move up here. There might be because of this line up here, and this is bearish engulfing candle. This is also bearish engulfing candle. 2 bearish engulfing candles towards downside on the weekly time frame. But this means overshooting. So oftentimes you can actually just remove these levels and remove these levels over here. I'm going to explain that as well. But having horizontal levels and having overshooting happens all the time. So horizontal levels is very, very important, right? Very, very important. The same thing goes when we are drawing the trend lines, guys. When we are drawing the trend lines. The same thing goes when we are drawing the trend lines. Overshooting will happen. Some kind of euphoria will happen. Stuff will go up, right? This to me looks like overshooting. This to me looks like overshooting because you see a price continue up, but continue all the way up here. Overshooting. So these overshooting, these huge euphoria moves or huge fear moves, panic moves towards downside, they overshoot stuff. And these moves sometimes don't come at some kind of tops or something like that, or pivot points. They come before, after, even the moves. So these big, you know, wicks and overshooting wicks when that are not on the pivot point, oftentimes indicate that there was some overshooting going on. Now look at this, guys. Reason I said that, you know, he has 2 green candles. And I have 3 green candles. Now let's look at my line. My line is actually on 2-week time frame up here. And I drew my line something like this over here. And I'm very confident in my line. So here's the thing. We draw trend lines on wicks, not on the body closes. We can use body closes as confirmation of the trend line. but we draw trend lines based on the confirmation. Now, 2 week time frame, there is no bearish engulfing candle up here. There is no bearish engulfing candle, so we can use these weeks. Now, why do I use this week down here and not this week up here? Or why do I use this week over here and not this red week over here or this green week over here? Why do I use a red week over here and not the green week up here? Did you notice? I don't know if you notice in my trading live streams and stuff like that. I will always use the red wicks. I will intentionally, not pick this wick over here, but I will pick this red wick on the side and do it like this. And guys, I don't have a very good explanation for what I'm about to tell you, but it is a TS secret, and it is something I used a lot of years to figure out. Because back in the day, when I was trying to figure out why, I always tell people, my aha moment, euphoria moment, not euphoria, but eureka moment came when I was looking at the price going towards the upside. It will stop at some kind of magical point in space I did not understand, and it will pull back. And from that moment on, I went around the house and I was like, how do people know the price is gonna stop exactly there and pull back? I don't know. And ever since that moment, I've been trying to figure out why does stuff, what are the correct lines, where the stuff should pull to and not pull to, where should stuff reverse, what is the right tool to use and stuff like that. Now, and I've been drawing a lot of trend lines, of course. I've been drawing all kinds of trend lines. You'll see a lot of people drawing trend lines like this over here, which is nice trend line as well. You'll see people drawing lines like this over here. There's a lot of ways that you can draw these lines, right? But I've been drawing this for a long time. And what I figured out, for example, over here, why use the red wick and not the green wick? It's because the red wick is not overshooting the euphoria. This is some kind of euphoria. When price goes towards upside, these green wicks will be euphoria wicks, right? These green is a euphoria wicks, while the red wicks are more normal, normal wicks, because they're pulling back from, they're pulling back for certain levels towards the downside, right? This is, some kind of overshooting. They managed to, pull back up here, and then the next, there is less euphoria in this. There is more calculated bot movement in this move up here than in this move over here. So this red wick on the top side is more legit wick of some kind of resistance. Now, when you do pull some kind of lines up here, and we should use this wick, not this over here, but maybe on some, but this two week time frame. But if you do pull it back, you'll see that all 3 wicks are red wicks, and this is not a bearish engulfing candle. It's hit exactly on the dollar. Now, why is this so, guys? Why do I only use exclusively red wicks, or I try most of the time to use red wicks to draw a trend line? It's because it just works. I don't understand why. My theory is because of the euphoria of the overshooting that happens. When you got horizontal lines, you have all the time overshooting when the price moves back down, right? That's why when we draw, horizontal lines, we don't use the wicks, we use the body closes. Because body closes gives us, support levels and resistance levels, right? Because this is called overshooting, right? Overshooting. And when we have also wicks and we draw in trend line, we also have overshooting, but we have overshooting on different lines, right? So this move towards upside, these green candles oftentimes can indicate overshooting. Sometimes they're nice, and I will use green candles, but I will, like most of the time, use red candles. I do not understand why. I believe it's because of the overshooting, but I do not know why. And oftentimes it's a lot nicer way to draw with the red wicks. I don't know. Shoot me, guys. I don't know the reason, but I will not, I will use the green as well if I can, because, the line needs to hit a lot, be hit a lot of time, to confirm the line and so forth, but I like red wicks. Now, in some kind of theory, on the upside, we should be using red wicks, but on the downside, we should be actually using the green wicks. Because we're having overshooting on the red wicks, and then the green wicks should be pulling back. But it's not the case, guys. It's not the case. It's always the red wicks. It's always the red candles. I don't know. I don't know why. And that, ladies and gentlemen, is TFN's top secret. We are using the red wicks because it just works for whatever reason. I don't know. It's the red candles. It's the red candles. I don't know why you don't use Fibonacci. It's the best to get the sniper entries. Okay, man, you do you, I'll do me. Now, That's it. There we go. And that's the reason why I like my line better. That's the reason I like my line better over here. Because it has 3 touches up here. If you pull it up here, if you make this line over here, it is a good line, but we don't have a 3rd touch. And it is a nice line because it can go all the way up here to the top and then confirmed. So this line, this wick up here also needs to be taken into consideration, and this one up here. So, but this already had 3 confirmed touches, so this is already very strong level of resistance. So you break this up here, you're definitely gonna test this next level up here. Now there are of course horizontal, horizontal support levels up here as well that might indicate that there's some resistance up there. But when it comes to the trend lines, of course, 3 touches up here indicate strong resistance support. So I would consider this one. 2 touches indicate possible resistance, and it will definitely test that. But if you just overshoot it up here, it's weak. Higher highs, higher lows. 5-minute Bitcoin time frame. Yeah, it is turning up a little bit. It's getting this, curvature move down here. So you're gonna see. Maybe it's creating some kind of bottom on small time frames. Maybe it's creating some kind of bottom on small time frames. But small time frames, guys. Small time frames. So we don't have that much indication that something is changing. It is hitting this 50 moving average on 30 minutes up here. 1 hourly is still, it's still, getting this doji down here. So it might be a nice try to go up here again. Might be a nice try to go up here again, either up here or 200 moving average, or the resistance up here, right? This great nice resistance. So, but it needs to go a lot higher than that. This move up here needs to go a lot higher than that to confirm some kind of bullishness, but it's not quite there yet. Let's agree to disagree. We can agree to disagree, man. No problem whatsoever. You do you, I'll do me. You know me. And I'm not bashing people doing emotional moving averages from Fibonacci's either. People are welcome to do that. You can see that guy George. You can see that guy. You can see our friend George in the chat. Our friend George in the chat. He's using the he's using Fibonacci and volume profile and stuff like that, right? He's coming a little bit, back to our, he's learning his lines, the channels as well, and he's coming more to our side because he sees what works, right? So I like that he's starting using a little bit of our way of doing TA. Because he came with a lot of Fibonacci's and volume profiles and stuff like that, but I like that he's starting to see the light and the magic that's happening. But the guy is doing very well, doing very nice trades, and our friend George is doing very nice trades and stuff like that, right? But he's using Fibonacci and volume profile and stuff like that, right? I mean, you can definitely do that, but we can agree to disagree. Also, Ichi Cloud buy sell signal won't show on chart using just lines. So you do you, I'll do me. I believe what I do is right. For whatever reason, it kind of works. I like patterns. I like real resistance and support lines. I like trends. I like momentum. I like patterns. I like moons. It works. I like stuff that works. That uses human psychology. For describing the patterns and stuff like that. The same thing up here. Like I really enjoy when I understand a little bit about human psychology and why this is moving towards sideways up here. This has just to do about the price is weak because they are pushing down. It is very bullish, but it's lacking bullishness. So this move up here, it tried to break up, especially this last move up here. It tried to break up. You can see here trying to break up here above the resistance up here, because this, you will see these kind of moves break up and continue, right? You'll see this curvature moves up here, and they need to break up and continue towards the upside. But this is a failure. This is a rejection. Came up here below that and continue bleeding towards the downside. This curvature moves. So understanding why certain stuff happens. Also, for example, shoe pattern, it does this move up here. Oh my God, this is a shoe pattern inversed. See up here? But this is actually some kind of But this shoe pattern, it's a little bit different up here. It's a little bit different because shoe patterns come from the top, right? They come from top to have a big impulsive move, and then you have this move up here. But this is going like, you know, I don't know what this is. This is new to me, man. This is new to me. So there you go. Of course, I'm gonna keep using it. Of course. I'm just saying that I think this is right. I don't know. I don't know if the red wicks are right, man. I don't know if the other thing, you know, bearish engulfing candles, bearish engulfing, also, you know, TIA Fans Club secret, bearish engulfing candles should be disregarded as any kind of pivot point or stuff like that. I don't know why. You should not use this as a pivot point, or the, you know, for that sake, you know, the green candle. You should not use this as a pivot point because this is a bearish engulfing candle. I don't know why that is, guys. I don't know. I don't understand it. I don't know why this point up here is should be disregarded. But what I've noticed is that, you know, you should, you know, use, you know, your line should go straight through that. I disagree again. You can disagree as much as you want, but I'm just saying, TIA Fans Classic, don't use these things over here. You have nicer lines. Just saying. Bearish engulfing candles eliminate the pattern, and use red wicks. I use red wicks. We can disagree, man, but one day when you're gonna be like, you know, TLA, you know, those red wicks, they kind of work. And when that day happens, I'm gonna be very, very happy. At one point, I mean, I didn't want to believe for the longest time. I didn't want to believe, but at one point, I had to accept what is. Yeah. So we're gonna see if we get that far, guys. I'm a little bit unsure what's gonna happen on Bitcoin in the nearest future up here. We're already getting a little bit support up here. There's a lot of support right below us. This might have been pullback, and you know, it's greatest pullback in the history of the pullbacks, because if we manage to, you know, do this pullback up here right now, we are breaking back above these moving averages up here. You can see how these moving averages curve up here. So if you do the, you know, pullback up here and, you know, start exploding up here, it's gonna be the greatest, you know, continuation of this move ever. Now the worst case scenario, definitely one of the worst case scenario, if we get bearish engulfing candle right back down here again. That is the absolutely worst case scenario ever you can ever have. The second worst case scenario is going back below 20 moving average on the daily time frame. That's the second worst case scenario. I mean, that can of course still, you know, continue back up again. I mean, these moving averages can, you know, zigzag, but you know, we are looking a little bit, you know, we are, you know, sitting a little bit on sideline up here. But the absolutely worst case scenario, back below 2.7 on the daily candle, right back here again. That is the absolutely most devastating worst case scenario that can actually happen to Bitcoin. Below 20 moving average is very bad. It's not devastating, but it's bad. That's what I'm saying. Of 9 AM, a little bit, you know, a little bit. So, you know, use red candles. Guys, thank you for stopping by. I'll see you tomorrow. And outro.